Welcome to Stock Trading Pro. Today's Stock Market Live, we have a fiery topic today, and whether or not you can time the stock market, or should you be a long-term buy and hold person for the rest of your life. Now, there's an entire industry on trading options that spend all of their time on timing the market, so somebody must be doing it right. But I am going to build a counter argument today that you will 100% believe that the secret to timing the market is not the entry. And I'm just going to put this right out there at the beginning because we're going to talk about this in a lot of detail today. We're also going to talk about this book. I can't wait to get into this book. This book is considered one of the trading classics in trading. It's about 630 pages, but there's really only one big thing in here that every single big hedge fund manager over the last 50 years has used the secret that's in this book, which is the secret that's on this clipboard, which absolutely positively proves that you can time the market. And here's what I'm going to tell you, okay? I'm fired up for this topic right now because I was up early watching a couple of YouTube videos this morning on the stock market, trying to do a little bit of research of what to talk about today. And there was this big conversation about timing the market is impossible. And here is why that is the biggest bunch of BS. And I'm going to stick around. I got to just show this just 1 second. Okay, now I am super fired up about this topic. And I'm going to tell you why. Every person who says that you cannot time the stock market is talking about the entry. Every single person who mentions timing the stock market is where you get in. Here's the secret. I'm going to put this up here, and you want to take this. Every single person who makes money in the market, come back a little bit, this is where the money's made. The money is not made in timing the entry. Ask anybody who is a big, profitable trader that has been around for a long time. Including hedge funds, including anybody that you could possibly think about who builds monster positions for the future. Nobody goes in and says, I'm getting all of my shares for this big move that's about to happen later, and I'm just going to perfectly get the exact spot where this thing is going to turn around. Sure, you can do that once in a while, but here's the thing that I'm so pumped about this conversation because so many people are making trading so much harder than it needs to be because you're trying to get the perfect spot. Look, even new people that come into our boot camp, is it to the exact penny? Is it 5 cents past the penny? You can learn to work your orders when you find the best stocks to buy now and you're looking to get involved in those ideas. Number one, you need to determine what kind of market condition you have, and that will affect your initial profit target. That's a key word right there, initial profit target, and how you work that order. The tougher the market conditions, you're probably going to be looking for a little bit of a tighter window on that profit. But again, initial profit target. This book right here, and I'm going to show it to you in just 1 second. This book clearly states, and there's dozens and dozens of interviews. You probably heard of Ed Seykota and all of those guys that are in Market Wizards, and we got the books on the back shelf. The secret of this book, okay? I don't care if you're trading a 1-minute chart or if you're trading a monthly chart. I don't care if you plan to hold a stock. I'm really pumped up on this topic right now. I don't care if you plan to hold a stock for 10 minutes or 10 months or 10 years. This is where the money's made. It is not on the entry. You can work your positions. You can build positions. You can scale in, scale out, and finally get the thing where it finally goes and then takes off. It happens all day for professional traders. We are paying the market when we buy stock. We are paying the market to get feedback on our initial entry, and that will tell us whether or not we have to scale back or scale in. That's the first part of the trade. That takes all the stress off the initial part of the trade, knowing you don't need the perfect entry. Now, I'll admit, I've been talking a lot, and I spend a lot of time talking about our method, which is order flow stacking and tape reading. Those two things combined stack the odds of the trade moving in our favor. When we talk about the optimal entry, all we're talking about is whether or not the moment you choose to buy that stock, based on what the stock normally does. Now, if it's a day trade, we're talking about average true range. If it's a swing trade, what we do is we teach our members about average true move. Now, again, remember what I just said about a minute ago when I was talking about buying stocks. I said very, very clearly, initial profit target. When we talk about optimal entry and initial profit target, what we are talking about is when you are about to hit that buy button, the very first part of that trade, the start of the trade, is does that risk justify the initial reward that you expect to make? That's just the start of the trade. We all know the market's fluid and some stocks take off, some stocks kind of go sideways and do nothing. It's when the stocks that you work the entries into hit your initial profit target. And I want you to write this down because it is super important. We are talking about the initial profit target. We are not limiting what we can make. This is why this is one of the most misunderstood parts of trading. And look, I hope you become a part of our Discord community. I hope you become a part of Order Flow Pro or our bootcamp. If you don't, we're going to stay here on social media. I'm telling you, take the stress off of getting the exact spot and work harder on exiting your profitable trades. We have every day on these YouTube live streams, we probably get anywhere between 1,500 and 2,500 people that watch the videos within a very short period of time. I am willing to bet. Matter of fact, I can tell you for a fact, because I owned a trading firm in New York City, I can tell you for a fact, we can have 1,000 people enter the stock all within the same price and end up with 700 different exits. The exit is where the money's made. That's the big thing that you will read in this book. Again, I'm just talking about this book because he does it. And again, I'm not telling you to, book weighs about 20 pounds. It's very good, but I'm giving you the cliff notes of what every single profitable trader understands. You can time the market. You need structure and you need to follow it. Anybody who says you can't time the market is focusing on the entry. I don't care if you're talking about buy and hold. At some point, you still have to time an exit. Ask everybody right now who is not understanding about timing the exit, how they feel about their portfolio prior to 2022 starting, and now halfway through the year, almost exactly halfway through the year in June. How do you feel now that you didn't understand timing the exit is where the money is made? So can you time the markets? 100%, but you need structure. Now we're going to take that to the next part of this equation, which is understanding how to time the market. Now, again, I don't have an affiliate link or anything like that. I'm just telling you that if you buy these kind of books and you read Market Wizards and all those kind of things, every single one of them talk about this, okay? So you need two ways to time your exits. Number one is your initial profit target. Everybody knows risk-reward ratio. So whatever you are looking to risk on that trade, virtually every trading book you'll read, again, market conditions change, bullish ideas right now, while the market's in a longer-term bearish order flow, bullish ideas have a little bit of a tighter risk reward because the big picture is against you. Bearish ideas, so I'll just give an example of a bearish idea from yesterday, which is this one. Ideas in the direction of order flow have a much greater likelihood of following through versus buying opportunities right now in the direction of the bigger move to the downside. Our initial profit target, our initial risk reward on bullish ideas right now is a little bit tighter. And we said be a little bit greedier and have that profit maximizer in place to book profits or scale out as bullish ideas start to move in your favor. You're just reading the market conditions. So you need to have, number one, to time the market. Again, initial profit target. Remember, you never want to limit what, I'm sorry, I'm yelling, but I'm excited about the topic because I was so fired up from somebody talking about this today. You need an initial target to justify the risk. The money is made after a stock hits your initial profit target. You found the best stocks to buy now. You timed your entry. You worked your entry, whatever it happens to be. You set your initial profit target. So now at least, again, the second part of what we do is tape reading. Part of tape reading is understanding how much can you make on this potential deal. You hired yourself as a money manager. The stock moves in your favor. Now what? You have at least one line in the sand. So tape reading, let's just put a definition out there that I probably learned about 20 years ago from Linda Bradford Rashke, one of the traders that I've learned quite a bit from over the years. Tape reading in her definition, which I think is a very good one, is whether or not a stock is moving closer to or further away from a significant reference point. Easy way to say that, if you buy a stock, is it moving up or down? Nobody knows that better than you, which is why we suggest do not paper trade. Even if you trade 50 shares, you're still in the market and you have a good feel for how that stock is trading and you're understanding how to read the tape. So that's just the first part. Setting an initial profit target is still not the exit. The exit, and again, I want to say this because this is where a lot of really smart, hardworking people who trade the stock market, I'm just going to say it, don't go far enough in how they create their trading plan. Do not get out at an exact price in your favor. Now, there's certain types of price action we call exhaustion, capitulation, cleanup prints, whatever you want to call it, where it appears that the market is reversing and price action and volume has changed. And you can see that. We talked about that yesterday, where we talked about stocks that trade double normal volume, getting to the point where that's probably the end of that move. But, and here's the big part of this, let's say a stock is flying to the upside and you get this giant green candle, massive spike in volume after that stock is going up for 2 days. Now, if that happens after the stock rallies for, let's say, a couple of weeks or a month, think about it. Let's use somebody. Let's use Raphael as an example. Okay, let's use Raphael. And let's say Raphael owns a hedge fund. Raphael then calls up Edward and he says, Edward, I just bought 5 million shares of XYZ stock. I only have 500,000 shares left, or maybe 1 million left. And I know every time I slow down, the stock stops going up. It kind of pulls back a little bit. So I know when I'm done buying, this thing's going to come back down. So they call each other and they're like, take this 1 million shares off of my hands and I'll be done with the order. And that's why you see these giant prints after these giant candles. So you're like, okay, that's different. We call it, there's a disturbance in the force. Something changed on the tape because of this massive context of price action and volume. But this is the key. Even if you spot that, you're not just simply exiting because something changed. That means that you move up your trailing stop loss and you see if there's further price action on the trade. You don't want to perfectly get, hey, Solomon's in the video today. You want to give it still chance because you bought it for a reason, still going in that direction. Here is the key. And I'm sorry if you didn't know this when 2021 ended into 2022, but you're going to have this knowledge now, okay? The biggest, these kind of traders, trend following traders, and again, could be a 1 minute trend, it could be a weekly trend. Do not exit on the way up. You need to give the stock fluctuating time, normal pullbacks to give it another chance to move. They have a designated price action on the way down that says, okay, that's pulled back far enough. That means now that this trend, this order flow has changed. So I can't stress this enough. You will see in every single interview with somebody, Paul Tudor Jones, whether it's Ed Sequoia, all of those people, they have some place where they're not picking the bottom on the way up and they're not picking the top on the way turning around. They're letting it fluctuate and eventually it pulls back to a point where you're out. Now, could be as simple as a break of a trend line, but you need the discipline to do that. Could be as simple as a break of a moving average. It could be a moving average crossover. It doesn't matter which one you use, but you need to choose one. You might be saying, oh, I know that, right? Yeah, well, how many of you right now are sitting on positions that you would love to have gotten out in January of 2022 when the market turned? It sounds, yeah, but did you actually do it? The exit, timing the exit is where the money is made in the stock market. When you find the best stocks to buy now, everybody puts all of this emphasis on where you're getting in. I'm telling you, I teach it. I've been teaching it for 20 years. I teach it to everybody in our community. Timing the entry is as simple as working the position until they work out. you get in, some of them move up, some of them move down, they wiggle and jiggle all around. Some of them you scale back on, some of them keep moving. It's working that initial position until we get a head start. If we get a head start, we look to add, and then we shift into profit maximizer mode, exactly as I just talked about. This is where the money is made. I can't stress it enough. So again, 7:30 in the morning, 7:45 in the morning, you woke up here. I thank you so much for being here with me. If you happen to be watching this on video later, I can't stress this enough. Pour a cup of coffee, put your cell phone on airplane mode, and map out your profit-taking strategy and how you time exits on profitable trades. For you personally, it could be worth a small fortune to take that and add it to what you already spent all of that time on, finding the top stock picks, figuring out sector rotation, getting involved in those ideas, which of these ideas are still hot. And then once you work that position, take all that stress off of getting the perfect entry, work the position, then when it moves in your favor, you'll know exactly how you're getting out. Now, I can hear you already, but what if I get out early and it keeps going? Okay, big deal. Big deal. You need to stick to your rules. You need to stick to your rules. In time, your rules will make you those bigger profits because you're going to focus on it. And they talk about this all the time. When I work with new members, they're like, well, my account size is small. And actually, ironically, somebody else just typed that in there right there. All right. Doesn't your account size matter if you don't emphasize great entries? It doesn't matter. You need to learn how to turn 3,000 into 3,500, which means that you now need to trade stocks that match your resources. So Derek, I don't know you. I've never met you before. If you were in my community, I would say stop using your account size as a liability and embrace however big your account size is. And I'm going to trade the stocks and the volatility that match my current resources. It doesn't matter your account size. So if I had a smaller account, it sounds like maybe Derek does. I don't know. I've never met Derek. But then you work the size of the stocks you're trading. If I have a smaller account size and timing matters, then I'd be trading stocks that have a lower volatility, probably $50 or less, and I'd still be looking to maximize the wins. I can't express this enough. It doesn't matter if your account's 3,000 or 3 million. It's the exit. And again, let's say that we're talking about the account size. And Derek, I don't know, Derek, I just want to be clear about that. But first of all, thank you for being here. Whatever size your account is, it's still not about the entry. Now, again, Derek is implying if I have an account where I have to take smaller risk. And again, I'm assuming that's what Derek's talking about, because if not, we're probably talking about a bigger window, right? You still need to time the entry within your risk parameters. But think about what we're saying. We're not talking about the trade in totality. We're talking about how to make money. Okay? So even if you have a smaller account and you don't get the perfect entry, you still have a choice of how long you choose to hold that trade. And let's take NEO as an example. Okay, and I'm going to walk you through a real example that was discussed in our coaching call just 2 days ago. So let's talk about NEO and let's talk about the daily chart. Okay, and we're going to talk about the fact that it's making higher lows. We're going to talk about the fact that it's making higher highs. This stock pulled back, right? Everybody knows, if you've been watching our channel for a while, we talk about a push and a pause, right? So now let's just say, for argument's sake, you got involved in that last push and these two red candles came in and you got a pause, right? Fantastic. But let's talk about this from a realistic perspective. If you bought that last pullback, you had a push and a pause, and you bought that last pullback, if you're still not in it, and or you got out when it rallied yesterday or the day before, I have to ask you, why? This is a $16 stock, not an expensive stock. Maybe Derek, everybody can trade that stock. We trade it pretty much every day in our community. Offers volatility, volume. So here's what I want to walk you through. This is the secret. And I hate to use that word, but it's this. Everybody's looking left when they should be looking right. It's the exit. So let's just walk through this just as teammates right now, right? So the stock pulls back, and a traditional swing trading entry would most likely be here, right? Push and a pause, push and a pause, right? Pulled back. The previous day's high, more often than not, is the entry. Stop loss to be down here. Now let's walk through this trade and whether or not you have an exit strategy. You need to have something that says this trade is still valid and I plan to hang on. So let's just do the most simple way. Just one strategy. Higher low, higher low, higher low, higher low, higher low. There's no reason to have gotten out of this stock at all in the last 5 days. If you got out simply because, and I'm going to tell you right now, this is what happens for so many traders. I was guilty of this too at the beginning of my career. I want to make that very clear. You get out because you're watching your profit and loss statement and you're afraid that that unrealized profit will vanish. Well, let me tell you something. I had that affliction. It's a trading disease that we all have. The only way to get around it is you have to ask yourself this question. Am I okay with risking a small unrealized gain in exchange for a much bigger win? That's the math. That's the concept. You have to ask yourself that question. Now, you might be saying, well, yeah, of course. Well, prior to putting the trade on, you were willing to risk a loss in exchange for making some money. At this point, you now have a small unrealized profit. Are you willing to risk zero in exchange for a much bigger move if that thing continues to take off? These are the questions that we need to ask ourselves after hours when we're mapping out our trading strategy and looking to make money. Now, the argument for that is, but Pete, I was up $1,000 when I bought that stock and it came back down and blah, 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 blah. And I'm like, okay, yep, that's a part of trading. You're focusing on the one trade or the two trades that didn't follow through, came back, and maybe you made a smaller profit than you had. But big winning traders. And again, when I'm saying big, you can have a $3,000 account or a $3 million account. It's big. It's big in context, right? If you have a $3,000 account and you got this trade on the line and it's still moving in your favor, you need to risk unrealized gain to, at worst, a small profit, maybe break even in exchange for the next big move. Now, the argument is I gave back that profit. That's the wrong focus again. You should be focused on the 1 or 2 trades per week or per month that don't come back and keep going. Those are the trades that pay the bills, and those are the trades that turn a $3,000 account into a $3,700 account. Not 3 to a million, 3,000 to 3,500. Then you turn 3,500 into 4,200. That's how you slowly grow an account. So let me ask you a question. I could hear some people right now saying, yeah, but, right? Yeah, but. So let me ask you a question. If I told everybody on this call right now, you're going to make 20 trades this month, let's say for the month of June, right? This is going to take all the pressure off of whether or not each individual trade makes money. If I tell everybody on this call right now, and again, financial education, we're just talking about education right now, but this is actually what I do, okay? If I told you right now you're going to have 20 trades for the month of June, you're going to make $10,000. Again, just throwing a number out there. You're going to make $10,000. Financial education, okay? I'm on video. I got to say that multiple times. But only 4 out of those 20 trades are going to be responsible for you making that $10,000. So that means 16 trades made or lost a little bit of money, washed each other out, and only 4 followed through, never came back. You used what we call a profit maximizer, and you make big wins on those trades. Is anybody on this call right now going to say, yeah, but I had 16 trades that didn't follow through? Or are you going to focus more on the fact that you understood that this is where the money's made on the exit, not winning percentage, not perfect timing, holding winning trades longer? Now, what's the most exciting part about that? That's on you. That has nothing to do with what happens in the market. That's a choice that you make for how long you. Now, again, raise your hand. How many of us right now, think just this month, think the last couple of months, think the last year, whatever it happens to be, probably 2021 is probably the best example of that. How many of us had profitable trades that we got out of too soon. Everybody has. It's an affliction that we all have while we're trading, that you need to have some structure. Now, if we did that in the past, that's one thing, that's fine. But if you're smart, if you really want to grow as a trader, you have to learn from every single experience and be better on your next trade. So I'm throwing this out right now to everybody. Work in your spare time on developing a strategy of coming up with your initial profit target. That's what you're choosing to accept to take risk. But once it gets to your initial profit target, I gave you 4 different ways of doing it. And I just gave you another way when we looked at that NEO chart. Have a strategy that tells you, okay, this has reversed and I'm going to book the profit now. Have a strategy that says, this has not reversed yet. I'm not going to look at my P&L and I'm going to hang on to this until my system tells me I should get out. On the profitable side of the exit is where the secret lies. And I hate to use that word secret because it implies like something nobody knows. I'm not talking about it as a marketing term. What I am talking about as where everybody's looking left, which is the entries, when really the money is made over here. I can't stress that strongly enough. And I'm going to challenge anybody to prove me wrong on that. And I'm on YouTube right now. Prove me wrong that we wouldn't have 500 of the same entries and probably have 450 different exits. It's the exit where the money is made. And it's really drilled home in this book. If you've never read this book before, it's pretty good. And you look at all of the market wizards, there's some sort of exit strategy that allowed them to make more on the winners, understanding when to hang on, and definitively getting out of the losers. Okay. Let me see. Christopher, how's it going? Have you altered your answers to that question at all during recent times? Yeah, Chris, I don't know if you were on the beginning of the call. 100%. 100%. Now, the thing is, I haven't, let me take that back. I haven't altered my answer. We are adjusting our initial profit target depending on the current market environment. So what are you, day trading or are you swing trading? That's going to dictate the order flow you're looking at. Are you holding longer or are you trading for cash flow from one day to the next? So again, Chris, I don't know if you were on the beginning of the call, but we were adamant, very adamant. And Sammy actually brought this up on our coaching call on Monday about adjusting initial profit targets on buying opportunities right now because there's a big bearish environment. So we are tightening up our initial profit target on longs right now, but we still have aggressive profit targets on short sales right now. Why? Because we're just trading what the market gives us. So you can't trade in a vacuum. And Chris was actually in our boot camp, so I really appreciate the question, Chris. So really it comes down to what type of market are you in? Just to really super simplify this, what kind of market are you in? Who's in charge? Bulls or bears? Next step, go up to the sector, go to the industry, and go to the stocks. You have to put those pieces together. So that's order flow and tape reading. You're building an argument for follow through. Let's please write that down. Before we look to buy a stock, we have to build an argument for accepting risk. That argument is order flow. The order flow you look at depends on your objective for the trade. How long do you plan to hold it? You put all the pieces together, the market, the sector, the group, the stock, the market internals, and volume. Put those pieces together. That's going to give you the argument. When you have bearish market but a buying opportunity, that's going to give you a certain expectation for your initial risk. Even if you have a smaller expectation for stocks going up in a bearish market, you still should use some form of profit maximizer. The way that we teach it, there's 2 different kinds. So let's say that we have the market going down right now, but we're buying something. We will more than likely use what we call a momentum profit maximizer, which is a little bit of a tighter profit-taking strategy because we're trading a bearish move, but a strong recent move. If we have a big bullish market and we're buying in the direction of that bullish market, then we will shift to a trend trading profit maximizer. It's 2 different styles of booking profits depending on how we build that argument for a stock moving in our favor. So you need to adjust how you interact with the market based on order flow and tape reading Then you determine where are you from the optimal entry. Then you determine your profit targets and putting all those things together. So I got fired up today because there was somebody saying you can't time the market. And my immediate thought process was because they're talking about the entry. Everybody's talking about this market continues to go down. Who's going to try and predict the bottom and all that kind of stuff? It's not about predicting the bottom. It's about having structure in place. And when you put those trades on, do you hold your winners long enough? Which, by the way, and I want to say this as respectful as I can because I'm doing this a long time. When you learn to make more on your winning trades, and you have a track record of doing that, it removes all of the stress of losing trades because your business makes money. And think about this. I know you'll be like, yeah, whatever. Let's say that you run a business and your business makes $3,000 a month, but your expenses are also $3,000 a month. So you're trading, you make $3,000, you lose $3,000, make $3,000, lose. So you're breaking even. So you hate taking those losses. You have all this negative emotion around trading and taking a loss, like Derek said before about having a timing with the size of your account, right? So you have all that stress of the losses, of paying those expenses, right? But again, let's trade in the real world. What if your business makes $10,000 a month? Let's say you own a deli or whatever it happens to be, right? But let's bring that back into trading. If your deli makes $10,000 a month and you have $3,000 in expenses, you got to pay your employee, buy the bologna, pay the lights, but that's $3,000. Are you going to get angry about paying the electric bill when your company makes $10,000 a month? No, it's the same thing in trading. Learn to manage the downside. And then while you're learning to manage the downside and run your business, now you're spending your other time on how to increase your revenues. It's basic business. But for some reason, because there's such a low barrier to entry to get into trading, too many people don't see it as a business. You hired yourself as a money manager. Learn to make money, not just focus on that entry. So I got so fired up about this right now because everybody was talking about and clearly having a big conversation about the recession that we're in right now and the market going down, the stock market crash of 2022, and everybody's arguing about whether or not you can call the bottom. Calling the bottom sounds great. It makes for great sound bites. The money is made on the exit. All right. So anyway, speaking of that, look, I got so fired up. I hope that was valuable for everybody. If it was, can you please do me a favor if that provided some value for you? And more importantly, if that was actionable for you, do me a favor, hit subscribe and smash the like button. If you have follow-up questions on this, leave a comment below the video, and I'll be more than happy to get back to you as soon as possible. But I want to pay you back a little bit more and give you a couple of ideas that I'm actually looking at heading into today on Wednesday. Some bullish ideas that we're looking to work some positions, and actually a couple on the bearish side as well. So the bullish side of things right now, one of the things we were looking at yesterday was Zoom. You can actually see the breakdown that we have in Zoom. So again, this is something that separates a professional trader from everybody else. We look at Zoom yesterday. We had a 115 alert on Zoom. ZM is the symbol. Got above there. A couple of members in the community said, well, are we getting in? Are we getting in? I'm saying, no, this is the first time it got up to that level. I want the stock to prove to me that it's going to stay there. So we didn't get in yet. So now we have 115 in Zoom as the next level that we're looking to get in. So pulled back a little bit, but this is a stock that we're going to be keeping an eye on this week. So Zoom above 115. You can see it's got plenty of room to the upside. One of the other ones that we've been keeping an eye on is actually IBM. IBM, if we drop in this guy right here and take a look at the 50-period moving average, you can see that we actually had a bottoming tail. Stock had a pretty good rally, pulled back, held support, down a little bit this morning. I'm looking for it to trade above 139 for me to look for a new entry in IBM. Now, I do want to talk about the other side of the market because we're still in a bearish market. Now, again, I want to talk about what I spent a lot of time mentioning yesterday, that I was looking for the market to rally this week because it appeared that all the bad news is out. We'll probably get a little bit of a relief rally. So remember what I just talked about with the exit? So we were very clear yesterday that we said the market's down pre-market this morning, but I said I am leaning on the opening price from yesterday, Tuesday, when the week started, to be my line in the sand to tell me if my thesis, if my argument is still valid or not. So let's actually point that out and take a look and see how that looks right now. So we are obviously down this morning. Let me get this guy off the screen right now. And we're going to go here to the weekly price. Okay. So we can see that we're trading down a little bit lower this morning. Right here at that level is my line in the sand. So we're actually a little bit below that right now. We'll let the market open. Now, here's the thing. And this is trading in the real world. Okay. I went on video yesterday. I said, this is my argument. This is what I'm looking for. All the reasons I'm looking to put the trade on. The same way that we talked about having profitable trades, if the story changes, you need to make a decision to book a profit. Again, there's so many different ways of translating it reversed, right? If my argument for this week is no longer valid, I simply get out and look for new ideas. I don't argue with price action. I don't argue with the tape. I don't argue with order flow. So I'm sticking to what I said yesterday. We're going to open up a little bit lower this morning. We got numbers coming out this morning. We'll see how it unfolds. If the longs don't follow through, I'll kick it out and we'll look for new opportunities. I am running a trading business the same way that you're running a trading business. I'm managing my inventory, which is my capital. When things work out, I look to expand my business. If things don't work out, I did my best. I get back into cash and I look for new ideas. Rewind that part that I talked about managing money, both from if you made 20 trades this month and the other part about ending up the month profitable. Very important stuff. Again, think about your own trading business. Do you make $3,000 and have $3,000 in expenses? Do you make $10,000 and have $3,000 in expenses? I'm telling you, and I promise you, I'm on video, right? I promise you that when your business understands how to make money, all of that negative stress of losing trades vanishes because you have a track record. It's learning how to make money, learning how to stack the order flow, learning how to read the tape, learning how to exit the winners properly. That's really where the trading comes in. That's really where the magic of trading comes in. And you get to that point where you're just running a business, like time to make the donuts. Losing trades stink. I'm not saying they don't stink, but they're a part of running a business like running any other business. So those are the ideas that I'm looking at right now. And actually, somebody talking about Netflix right now. Netflix actually happens to actually be one of our short sales coming into today, which actually broke down again yesterday. So Netflix actually had relative weakness. The market rallied 500 something points yesterday, and Netflix was actually down. So Netflix down while the market's screaming. So Netflix has relative weakness. So that would be one of the ideas that we'd be looking for a short sale. All right. So I have to head out, everybody. Got to get ready for our other call. I can't express strongly enough. I'm really appreciative of you coming here and joining me every morning. If I provided some value, do me a favor, hit the subscribe and make sure you hit the thumbs up button. If you have any questions, leave those comments below. And have an awesome day today. I really, really appreciate it. Thank you so much.